Say how are you?
Yes, I'm pretty sure you want that.
I'm well. How's everything aside?
No, so far so good.
Off. How is trading?
Wow. I was just going up. Yeah. And I was just taking that big out.
Okay.
How is it with you?
Always well. I managed to make money on the US 30 today, just like yesterday. Even on the VIX, on the VIX, we managed to make money on the sell in the morning. Because yesterday we were holding since yesterday around midnight that time. So we made money from here, then came out around these areas here. Yeah, so that's where we made our money on VIX. US 30, we made money as well. So here now we're now trying to attempt, we were looking forward to maybe a possible sell. Since this was a breakout, maybe this was going to be a retest, then it continues going. But however, there's this one that I marked, which I actually said in the group, if price fails to break there, it's going to shoot up. Check this blue line that I drawn here.
Yeah, I think I saw.
Right, so this blue line here, it's a level of support that the market created, came rejected, came the second time, then failed to reject it there. So basically, it was now a level of support. So long that support is still being maintained like that, price can still shoot up, of which it went up like that. So same as here yesterday, the entry that we took yesterday, the support was here. So here, so long price is above this level here, our entries are not safe. But once you see price breaking now this support, once you see, yes, you are safe now. So let me just remove everything so that we see overall what is happening on the VIX. Are there any opportunities now or there's nothing? So we can just start from the daily so that we see what is currently happening on the VIX. Right, so from the daily, I can just mark out some few key levels. For example, that one. I can maybe mark this area. Which other area can I mark on my chart? Right, yeah, that area as well. So these three key areas are some of the key areas that I'm seeing on the VIX. So this line here, price failed to close below this key area. I think that's why it's bouncing and shooting up like that. So if you remember what we spoke about in the last Zoom meeting, we spoke about price now being in an uptrend, whereby we are now forming high highs and higher lows. This was the broken high, meaning the higher high is here, higher high. Now we are most probably having a higher low here.
Information.
Yes. So we are currently in a bullish market on a higher time frame perspective like that. So we also have this trend line here. That trend line is still valid. Once you see it being broken, it's an opportunity for us to enter buying opportunities. What we do whenever we have a trend line like this, a major trend line like this, what we do above the trend line, it's our major buying zone. Then below the trend line, That's our major selling zone. We only do this to the major trend lines, especially the ones that you see on the daily. So below this trend line, it's a major selling zone. So if you see below this trend line, the impulse moves were all sells. Impulse, correction, impulse. All the major moves were sells. So that's why I'm saying it's a major selling zone. So above that trend line now, above that trend line, that's a major
the
buying
impulse.
zone. The impulse, we expect them to be on the buying side now. You understand?
Sure.
Right. So once that major trend line, because that is a major trend line, it's on the daily, so it's a major trend line. Once you see that major trend line being broken, we now anticipate impulse moves to be on the buying side of things, more than the selling side. So we now simply wait to see how price is going to react on that major trend line. Once it's broken, you simply can start entering based on lower time frame. You simply start entering because that's now a major buying zone. So if you check here, price is bouncing on this key level and also the 38.2% Fibonacci. And if ever you saw some of our videos that we did for our 7-day course, you realize that once you see price bouncing on the 38.2, what it simply means, it means the trend, that particular trend to that particular direction is very, very strong. It's very, very strong. That is what it simply means. Once you see price bouncing on the 38.2, it means the trend is strong to that particular direction. So that is what we are seeing here. So we can possibly, so the break of this trend line is also going maybe to be the break of the 0% Fibonacci, which is also an entry opportunity, whenever we're trading the Fib. Once you see the 0% broken, it's also another entry opportunity. If ever you didn't enter on the retracement, you can enter after the break of the 0%. So the break of the 0%, according to the daily here, will also be the break of this trend line. So once that happens, we are in on our buys. First target is this key level. Once this key level is broken, we now look to the next major key level, which is here. Right, so first target there, second target there. Right, so this is what we are currently seeing on the daily. One can even go to a 4-hour, but no need to even go to lower time frames, because right now the move that we're expecting it to happen on the daily time frame, which can take some few more hours to happen. It can take some few more hours to happen. So that is it. So currently, so first scenario, as I mentioned, is simply a bullish continuation whereby price will continue to the upside. That's the first scenario. But second, also possible scenario is for price to come to the trend line, come to that trend line and reject. Once it rejects, it goes down. That is also another possible scenario. So what we do whenever we have different scenarios like that, we simply wait for the market to react. Once the price comes to the key level and gives us that rejection that we want, that's when we enter. But if it comes and gives no rejection on the key level, we do nothing. We don't even enter. That is the good part about it. We don't even enter. So here, that trend line is key. We want to see how price is going to respond to that trend line. It's simply going to touch, then continue, then come down. We want to see now. We want to see what is going to happen. We want to see what is going to happen. So that trend line right now is a key trend line right now. Once you see that one being broken, definitely we are now moving forward to the upside.
Bullish. Right.
So you can even add, even if you try to add a moving average, you realize that the moving average is also supporting a bullish move. Let me just add a Fibo. Let me try to add a moving average, especially the 50 EMA. The 50 EMA. Right. So I just want to add the 50 EMA. So the 50 EMA, as you can look at it, it's below the market, it's below the price. So it's pushing price higher and higher and higher. That is why I'm saying the buys, once that trend line is broken, will take, that's a major buying zone.
Okay.
That's the reason. So it's even supporting, this moving average is even supporting buys. It's even supporting buys. So this trend line, once broken, we enter based on 15 or 30 minutes or 1 hour, we enter. Then that's what we are going to do. First target this area here. That's the first target. Next target is that next area. So it's simply now a zone to zone trading. A zone to zone trading. So currently now it's simply now waiting time because it's almost on the trend line right now. So it's simply waiting time to see how price is going to respond on the trend line. But however, everything right now is pointing to the upside, the probability, because trading is all like it's all about probabilities. There's nothing that is definite to say this is definitely has to happen. Trading it's all about probabilities to say where is the greatest probability. Is the greatest probability to the upside or to the downside. For example, right now, if you ask me where is the greatest probability, we can actually see that the greatest probability is to the upside because of the shift in market structure already that we've seen, whereby highs, lower highs have been broken. New market structure has now started to evolve. We now have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So that is one of the reasons. Second reason, we can also see the Fibonacci. Third reason, we can also see the moving average. So a lot of factors are putting the probability more to the upside than the downside. So in as much as the probabilities like that, we always need to wait now for price to, once it breaks the significant area that we want to break, we'll simply enter based on candlestick confirmations on 15 minutes or 30 minutes or even 1 hour. We enter, then we hold. So that's the thing.
So
that's
you appear to be swinging, huh? You're swinging this.
Yeah, it depends with the current move. For example, it depends with the move. For example, the move of yesterday, it wasn't really a swing trade. It was simply, we held it just for a few hours. It wasn't a swing trade. It was actually a day trade because we held just for a few hours. It depends with the move that will be there. Other moves can be held for days. Other moves, they don't require to be held for
that long.
Yes. So it simply depends with the move that we are currently having. For example, here, once we break and go into our major buying zone, I'm expecting it to come somewhere here, around here, which is the first target. So there you realize that that can actually be a swing move that can last for
Maybe
some a day or two or three, just to come there. So that one can actually be one of the swing trades. Once it breaks that one, once it breaks that level, it's simply a continuation to the next major level. So once we break there, it's actually an opportunity for a swing, a possible swing move. You understand?
I get it.
Yeah.
Mm.
So it's not like every time we swing, we only swing.
She,
Yeah. So right now it's waiting time now. It's simply waiting time. We're outside. It's simply waiting time to see how price is going to respond there.
mm.
So do you have any questions so far?
No. On this one, I think I understood and
Yeah.
every possibility you anticipate.
Okay.
Mm. Yes.
So yeah, that is it. That is it for the
Outlook.
VIX.
No, thank you.
That is it for the VIX. We simply wait for
It's,
to see what price, how is it going to respond on that trend line that we saw on the 4 hour. So if you check even on the 1 hour, why am I saying the probability right now is more to the upside than the downside? Even on the 1 hour,
there's
if you check this
the
breakout,
trend. Yeah.
that happened,
Mm.
it was simply actually an opportunity to start also
To start
buying.
buying.
Yes,
Mm.
here.
Didn't see that one. I only saw that kind of the channel which it's the one that I saw.
All right.
Mm. Didn't
So,
see the
right. So
yes.
if ever you were, if you go through some of the videos that are in the mentorship, you realize that after an impulse move like this, after we get an impulse move, and after the impulse move, we come to a corrective channel like this. The next move,
Oh,
we expect the same thing to happen. We expect an
mm,
impulse move again.
mm.
So here we actually anticipate something like this to happen, and you realize that the length of this is
It's
somehow
almost
is
mm,
almost equal to,
say that's the flag. Yeah,
yes.
the bullish.
So that is also something that we are looking at. So that is why I said VIX is now approaching a major buying zone. So
Mm.
once the trend line that I showed you on the 4 hour is broken, simply. So on the 1 hour already, we have a channel that has been broken, which was, those were earlier buys that one could have taken. But now
Yeah,
one can actually wait for the breakout on the 4 hour, which is the major breakout.
speaking
So
of the 7-day course, you
yes,
have some videos on YouTube.
no, they are not on YouTube. They are on Telegram, in the private Telegram group.
I see.
They are not on YouTube, those ones.
Now we'll talk about that as well. Yes, your record. So
Okay, I mean, it's not a problem. It's not a problem.
mm,
It's not a
mm.
problem. So I'm simply expecting something like this here.
Ah,
Something like
there you
this.
are on the way to just about that key level.
Yes. So I'm expecting it at least to touch the negative 61.8 Fibonacci. Something like this. So right now the probability right now is more to the upside.
Mm.
the probability is more to the upside than the
More to the
downside.
upside.
We are only dealing with probabilities here.
Because for the downside, we only have that picture.
Yes, to the downside, we only have the trend line. With the trend line, if ever it rejects there on the trend line, that's the only thing that we have to the downside. But to the upside, we have a lot of things. I showed you the Fibonacci retracement, the moving average, the market structure,
Okay.
and also this channel that has been broken.
Like,
so a lot of factors are to the upside than the downside.
Can there be a possibility maybe of rejection from zero level?
Yes.
Rejection.
Yes.
Back.
It can happen. So it can happen. It can happen whereby price comes, rejects there, comes back down here, then maybe go. If that does not happen, it can come and break. Once it breaks it, it comes and tests, then go. But the zero, it's also another good entry point. If ever one wants to scale in, once you see it being broken and maybe retested, you can even enter more trades there. Once we get to the negative 27, that's where you can expect to shift stop losses either to entry point or to a winning zone halfway. So those are some of the things that basically you get to understand more if ever you get the books or you go through the full course. The full course is actually good because it covers almost everything. You get almost everything. You actually can understand how to trade almost all these major assets that are traded on the forex market. You can actually be able to trade NASDAQ, US30, currencies, gold, everything. So it will now just be a personal choice now to say what instrument am I going to focus on.
I stick with this or
yes.
that. I like.
Yes, so it's now it will now just be a personal choice to say, me, I'm going to focus on this and this and that. Yes. So that is it. But basically the strategy, it works almost on all the instruments that you might think of. So yeah, personally, I focus on the VIX. Personally, I focus more on the VIX, US30. Those are my two major instruments.
Yeah, bread and butter.
Yeah. So this is also another channel that one can look at.
Oh yeah. That's on page
H4. That's on H4. If you see the market breaking outside of this channel, for example, if it breaks outside of this channel, that's where it can continue to push more to the upside to the next key levels, which is somewhere here. Or it can even maintain that channel up until it reaches those key levels. So
same.
Yes. So right now the probability is more to the upside. The probability more to the upside right now. More to the upside. So if ever someone was really paying attention here, first touch here, second touch, third touch here.
Very same point.
Buys could have started here.
Mm. Mm.
Then the next buy is after the break of this.
Okay. And then maybe second batch, third batch,
Third
and the
here,
fourth up.
fourth here.
Goodness, you can code it, yeah? Yeah,
Can you see it?
I see. This can be coded.
Yeah,
Good.
these things are coded. So
Mhm.
that's how you scale in. You don't just scale in
Mm.
anywhere. It's actually calculated. You don't just scale in just because you feel like scaling in. No,
Mm.
it's all calculated. It's all. So that is it. That is it. First entries, second entries, third, fourth.
Mm.
Right. So right now we're left with this one and this one. Then we see how far it can go. Is it going to come? Is it going to come here and come down? So here, if it comes here, you just need to see is price going to if it rejects here, you simply come out of your buys or simply shift stop loss just
Oh,
below the candles there.
mhm.
Then if it comes down back here, simply opportunity for us to enter. We'll buy more. We'll buy again there.
Mhm.
We are simply following the trend now. We are
Sure.
simply following the trend. So that is it. That is it. So right now, I'm simply expecting a beautiful, beautiful push to the upside.
Breakout.
Yes,
Yes.
on the breakout there.
Mm.
Expecting some good entries there. So, we've been talking about VIX ever since the year started.
January.
We've been doing the sessions, telling guys, this is going to happen, this is this. But just find out someone didn't enter, someone entered, someone did this, someone did that. It's now the ball is now in your court after all has been said and done. Because
Yes.
after we have explained everything and still you see people not entering, not there, we can't do anything.
Yeah, you can't. It's beyond.
It's beyond us now. It's beyond us. But basically, we would have explained everything. Why are we expecting this? We would have explained. Others, when it's time to hold, you find them coming out too early. So a lot of things happen. A lot of things happen, but people are
Yeah.
just different. People are
Yeah.
just different.
Yeah.
Others, they take their time to really follow instructions, and
Yeah. We don't really, pick up same time.
yeah. So that's the thing. That is why people can actually be taught by one person, but you find out that the results now they differ.
Oh yes.
It's very possible, very possible to get the same course just like others, but you find out that the results now, because the results they are affected also by the individual. You have
Different,
power enough to affect your results.
different psychologies.
Yeah.
Mm.
So that is what we are currently looking at for the VIX.
Okay.
That is what we are currently looking at. Any updates will keep you updated in the group. Otherwise, so far so good. As for US state, I think we've made quite a decent amount of money yesterday and today. Yesterday we killed, today we killed. No.
Yeah, that one I see you on the side. They showed me on the side.
Yeah, so that one, that one we killed it. Yesterday and today, that's a lot of pips, honestly.
It was massive.
It's a lot of pips because the US 30, the difference between the indices and the currencies is that indices, when it comes to pips, they it's a same move. Let's say GBP USD moves from here to here. Then you realize that it's 60 pips.
Okay.
On Nasdaq or US 30, you realize that that same move from here to here, you realize that it's actually times 5. Times 5 or even more. Same move. So that's the reason. That's one of the reasons why you see many people, they are running to indices. It's because of the number, the issue of pips. They actually can make a lot of money in a short space of time, more than in currencies. Yes. So that is the reason. That is the reason why many people are opting to focus more on indices, simply because of the fact that in a short space amount of time, you can actually make a good amount of money.
Sure.
Yeah.
And for the indices, you also catch them like on the price section like this, or maybe sessions.
Okay, yeah.
Open.
Indices like, for example, we start trading them around 9 in the morning. That's the first session. Yes.
Okay, yes.
Around 9 to around 11, 12. That will be the first session that we look at them. If we don't get any good moves there, we simply wait for the NYSE open around half past 3 going forward there, because that's where we get the volatile moves and everything. So it's not like they are different now from our VIX. So by VIX you can trade anytime. There's no sessions. That's the difference now. So yeah, that is it. If you have any questions, feel free to ask anything.
No, I think we covered.
Okay, so yeah, much of the updates will keep you updated in the group. Okay. We see. You're welcome.